you were a private wealth advisor at Fidelity, and at one point you lived and worked in Beijing and in Hong Kong, and that sort of led to you to explore this relationship between freedom and markets. So we had talked about this a number of years ago. Just tell us briefly about that. How did you come to this conclusion that certain freedom metrics really did matter a lot?
Yeah, I started at Fidelity in 2004, and back then all of my clients wanted to be in China. I had just come back from a year in Hong Kong where I saw the difference that freedom had made in the Hong Kong market versus Chinese mainland market versus the US market. And I didn't want to personally be investing in China at that point, but everyone else did. And then I had clients from Russia who said, I don't want to invest in Russia because it's like funding terrorism. And look how prescient that is today. So my own experience and those of some of my clients led me to this idea in the end. And a lot of my colleagues at Fidelity as well were helpful. And I think it was just the right product for the right time. I'm just fortunate to have been in a space where we were able to provide an emerging markets product that had no China, that had no Russia for the last 5 years. In addition, it had a lot of exposure to the freer markets that don't get a lot of play in the cap-weighted indices like Poland and Chile, which have done well. So I think the freedom story has played out really well. I came in with no expectations. Obviously, long term, we expect freedom to outperform. Yeah. But in the short term, anything could have happened. And so Tom, I think we're just
I want to go back, Tom, to a point you were making earlier. That is, for years, the global investing community has recommended investing by market capitalization. You and I were doing 10 years ago. That's what everybody said. If China was 20% or 10% of global markets, you would own that in a global fund. They would have 10 or 20%. But that's being challenged. The only other group was the old value guys who used to say if China trades below 14 times forward, buy it. Other than that, it was investing by market capitalization. Now, in the last 10 years, now we've seen Xi Jinping, the head of China, his hostility to capitalism seems to have reversed a lot of that positive sentiment on China investing. So we've been all rethinking China as an investment, for example, and ideas that Perth has been championing for a while now. Wait a minute, we need to consider other metrics other than just blindly investing on market capitalization when you're dealing globally has come to fore here. Yeah. So it's really interesting it's happened in the last 5 or 6 years to see how this argument, this discussion has evolved from, oh, we're just investing by market cap to now we have other kind of potential metrics that we ought to consider.
Yeah, long-term investing has gotten a lot shorter, Bob, because you're judged all the time. You think about all the 400,000 financial advisors that are out there. If they are properly diversified the way you read it in the textbooks, they don't have much of a business because you have to be in those areas that are performing. So today, a lot of it is large cap US or even in the US. But not only emerging markets, but areas like small cap. The diversification just hasn't made sense, and fewer advisors have allocations in areas not just EM, but also small cap as well. But valuations justify that. The big question is, are they going to have a run? Is this move that we've seen recently, so far year to date, actually going to come to fruition?
Right. But irrespective of the price moves, there is a broader philosophical discussion about this that you helped institute a number of years ago about, are we just blind capitalists and investing anywhere where diversity, without any regard for ideology at all? I mean, Xi Jinping seems implacably hostile to the kind of capitalism we practice and want globally. Talk about political system versus economic systems, for example. I'm trying to drag this into a broader philosophical question, other than just, do we just invest by market
Is he eventually going to step in line?
Is the big.
That's the question.
This is the source of the nexus of the whole conversation, or not? Should we actually consider these issues that we never did consider before? Frankly, I've been doing this for 30 years, and
when you end up changing the rule book, all of a sudden,
that's a good question.
The last rule, all of a sudden,
that's the very good.
In,
that's a very logical pushback to what I was just saying.
Yeah. So I think everything that we do, whether it's value investing, whether it was ESG, whether it's small caps, large caps, any kind of other factors, you first have to have the foundations in place. So personal and economic freedoms are so basic to us in the United States. Like you said, the United States markets are used to it. When we're looking at overseas markets, we don't think about that. So first we have to have that in place, and then we can talk about all of these other factors. So I think that it's not so much a rule change, but a recognition that at the basis, that the foundation for all of the rules that we use have to be there before we can add other rules to it.
Is there a distinction, now I'm talking about a political system versus economic system, is there a distinction between freedom and democracy, for example? I mean, we used to say, well, all right, so China, under Deng Xiaoping, okay, it was not a democracy, and yet it had some capitalism as an economic system. Okay, so politically it was an autocracy. Economically, what would you call it? State capitalism? I don't know what you would call it, but it wasn't the kind of capitalism we had. But today, obviously, you know, they're moving away from even state capitalism. It seems like towards total control of the economy, essentially. And that's different than things were before. So I guess my question is, we used to think you couldn't have capitalism without democracy, and they've shown that you can have some capitalism without democracy, essentially. Is there a distinction between freedom and democracy?
Well, I think the thinking used to be that their capitalism would lead to democracy. And so economic freedom is a necessary but not sufficient precondition for personal freedom. And I love the analogy that Jim Gortney, who passed away last year, he was one of the grandfathers of economic freedom thinking for our data providers at Cato and Fraser. He said all freedoms work like parts of an automobile. You can't have a transmission without a steering wheel. The car still won't run. So all of these freedoms work together to provide this basis for an economy. And without that, the economy is going to be constrained. So we want to be in the places where the economy is not constrained, where companies are not constrained.
So your point is keeping the automobile is your best automobile, the best transmission, the best motor humming in the right way is that these freedom metrics. The
foundations of the freedoms have to be there.
Yeah, yes. I get that point. Tom, we're still in this game here. The whole, it's still working, the global investing idea. I mean, your point is, I guess the problem with this game, like it hasn't worked for the last 15 years, now it's going to work, right? So reversion to the mean is going to be very, very real for everybody.
Well, if you look at emerging markets and what Toll's done by not being in China, from a performance standpoint, it's provided less volatility and better performance. So to a degree, she's proven that out. I mean, knocking on $1 billion, congratulations. I mean, this whole ETF business is very easy, isn't it? Wasn't it from the start?
Right from the beginning. Yeah.
Yeah, you were there from the start, Tom. Thanks for, Tom was one of the first people I talked to in the business. I think you gave me a discount to your boot camp conference. So thank you for that. That was my first.
I thought you snuck in the back and didn't pay.
No, I probably did actually.
Yeah, she probably
That's
did.
possible. Yeah.
Well, the point here is that reversion to the mean is very real, and diversification, I think, still matters. I don't understand people who say, oh, well, the U.S. has outperformed for the last few years, therefore we're abandoned. That's exactly the wrong thinking, right? Throwing all your money and abandoning diversification. That's when it actually goes back to the mean.
Yeah.
When you say, oh, the U.S. has outperformed for the last several years, therefore it must outperform. That's recency bias.
Yeah.
That's a classic behavioral economics mistake.
I know when you invest your own money, you have a certain allocation, you stick to it. And you probably have some allocations in your portfolio that's stinky poo. It's not that great.
I'm one of the few people that actually publish what I own in my book, Shut Up and Keep Talking, and I have a 10% allocation to international. Yeah. I have had for years, and because of that, I've underperformed. Yeah. If I just own the S&P 500, I've underperformed. Every year I look at it and I said, huh, well, I underperformed the S&P again.
And you keep adding to it, and long term, it's going to end up paying off. I've been buying small caps the last couple of years, and I keep banging my head against the wall. But eventually,
good point.
It's going to happen.
All right. It's been a great discussion. Thank you for wanting to have you back on it for a while. This whole tariff thing is a good reason to get her back on and get your thoughts here. Remember, it's more than just investing by market capitalization. There is some ideology and some philosophy that's involved in a lot of this. I love this kind of stuff. I love these kinds of discussion. That's it, folks. That's it for this week's ETF Edge. My thanks to Perth and Tom. We have asked Tom to stick around to provide us with some additional perspective on broad ETF trends, not international, but broad trends. There's some very interesting things going on this year. I want him to comment on that. This is coming up on the ETF Edge podcast. And remember, you can see all of our shows. It's on our website, etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.